Hello, everyone, and welcome back to the channel. Today, we're diving into some big news that could affect your local grocery run and how millions of American families shop. Kroger, one of the largest supermarket chains in the United States, has announced plans to close approximately 60 of its stores nationwide. This isn't a minor adjustment. It represents a strategic move that will impact communities across the country. To put it in perspective, Kroger operates about 2,731 stores across 35 states and Washington, D.C. as of the beginning of its fiscal year, meaning these closures represent about 2% of their entire footprint. If we look specifically at Kroger-branded grocery stores, which number around 1,239, then these 60 closures could represent as much as 5% of those specific locations. These significant closures are slated to happen over the next 18 months, which means we could see these changes unfold between now and the end of 2026. This strategic shift comes as Kroger aims to streamline its vast operations, reduce costs, and enhance the overall customer experience across its remaining stores. It's also part of their concerted effort to rebound after their proposed merger with Albertsons, which would have been the largest supermarket merger in U.S. history, ultimately fell through late last year due to pressure from regulators. Furthermore, these decisions follow some recent leadership changes, including the abrupt resignation of former CEO Rodney McMullen in March following an internal ethics investigation, and 2 rounds of layoffs impacting non-store workers this spring. Interim chairman and CEO Ron Sargent, who took the helm after McMullen's departure, has stated that the company had paused its store evaluation process during the 2-year effort to merge with Albertsons, and these closures are now part of a renewed focus on store performance and efficiency. From a financial standpoint, Kroger disclosed a $100 million impairment charge in their first quarter earnings report specifically related to these planned shutdowns. However, the company is making it clear that despite these closures, they expect a modest financial benefit, and critically, this will not negatively impact their overall full-year financial outlook. In fact, their first quarter performance was quite strong, exceeding expectations. They reported total company sales of $45.1 billion in the first quarter, which was a slight decrease from $45.3 billion in the same period last year. But this was largely due to the divestiture of their Kroger specialty pharmacy division, which contributed significantly to last year's sales. Excluding fuel and the specialty pharmacy, sales actually increased by 3.7% compared to the year-ago period. They saw impressive identical store sales, meaning sales from existing stores not including fuel, go up by 3.2%. Driving this strong performance were impressive sales increases in pharmacy, e-commerce, and fresh food categories. Notably, their e-commerce sales jumped by a significant 15% this past quarter. This positive momentum has actually allowed Kroger to raise their identical sales guidance for the full year, increasing it to a new range of 2.25% to 3.25%, up from their previous forecast of 2% to 3%. This indicates confidence in their remaining business despite the store closures. Net income was down about 8.6% to $866 million, but gross margin saw an improvement to 23.0% of sales. The company noted that inflation was just under 2% in the first quarter, and their full-year guidance for inflation remains in the 1.5 to 2.5% range. They also acknowledged that American consumers remain cautious in their spending, shifting purchases towards private label items and buying products on promotion, and are making more frequent shopping trips while spending less per trip, often cutting back on discretionary items like snacks and certain general merchandise. Now, for what many of you are wondering, which specific stores are closing? Here's the challenge. Kroger has not released a comprehensive list of affected locations to the public. They've stated that the closures will be spread across the U.S., impacting various markets and divisions with perhaps just 1s and 2s in each. This means that while some communities will unfortunately see their local Kroger-branded stores close, it's not expected to be a mass shutdown in any single area. However, we do have a few confirmed details. If you're located in the Cincinnati-Dayton region, which is Kroger's corporate headquarters, the company has explicitly stated that they do not anticipate any closures there. Unfortunately, some specific locations have indeed been confirmed to close, including the Kroger store at 1707 West University Drive in McKinney, Texas. Additionally, the Kroger stores in Kingsport, Tennessee, and Abingdon, Virginia are slated to close their doors on September 19th. A significant closure that has also been confirmed is the Kroger store number 739 in Gassaway, West Virginia, which is scheduled to close on August 22nd, 2025. This particular Gassaway location has faced profitability challenges for several years and had previously been set to close in January 2023 before a deal allowed it to continue operating for at least another year. While the company has not released specific lists for states like Colorado, Indiana, Kentucky, Kentucky or Illinois, Kroger operates numerous stores across these and other states through its various banners like Fred Meyer, QFC, King Soopers, City Market, Fry's, and Smith's, implying that closures could potentially occur in any of the 16 states where Kroger-branded stores operate, including Alabama, Arkansas, Georgia, Louisiana, Michigan, Missouri, Mississippi, Ohio, South Carolina, Tennessee, Texas, Virginia, and West Virginia. For the employees impacted by these changes, Kroger has pledged to offer them positions at other nearby locations. The company emphasized this commitment as part of its strategy. However, unions such as the United Food and Commercial Workers Local 400 union have raised concerns that for many workers, the distances between stores might make transfers impractical, and they worry about a reduction in good union job opportunities, as well as limited food access in rural areas where alternatives are scarce. The union stated that communities served by these closing stores will suffer as a direct result of Kroger prioritizing Wall Street investors over their customers and hardworking employees. They argue that instead of buying back its own stock and paying legal fees for the failed Albertsons merger, Kroger should invest in better compensation for associates, improve staffing, and store upgrades. Looking ahead, Kroger emphasizes its commitment to driving growth in its core business. They are pushing forward with an aggressive strategy that includes about 30 major store projects in 2025, such as new store openings and significant remodels, with even more accelerated openings expected in 2026. These investments are part of their plan to reinvest the savings from the closures directly back into improving your shopping experience. They are heavily focused on expanding their private label offerings. For example, adding 70 new high-protein items to their popular Simple Truth line, and vigorously improving their e-commerce operations. While e-commerce is not yet profitable, the company's interim CEO, Ron Sargent, and new Chief Financial Officer, David Kennerly, who are bringing a fresh set of eyes to the business, noted that profitability in this segment is improving at an increasing rate, and they are committed to making it profitable by leveraging new technologies and focusing on core strategies. They are examining every aspect of their e-commerce strategy, including reducing wait times for store pickup orders. Kroger's management is looking at every component of the organization to determine what fits now, what fits longer term, and what is making or losing money, with new store openings being a key driver of market share gains, particularly in faster-growing areas of the country. So, while some American communities will unfortunately see their local Kroger-branded stores close as part of this strategic realignment, the company views this as a necessary step to enhance its overall efficiency and reinvest in areas showing stronger growth, ultimately aiming to improve the shopping experience for millions of customers across its various banners that serve neighborhoods from coast to coast. This ongoing evaluation of their store portfolio is a regular business practice for large retailers like Kroger as they adapt to evolving consumer behaviors and market conditions. That's the latest on Kroger's plans and what it means for your wallet and your neighborhood grocery store. We'll continue to monitor this developing story as more information becomes available. Thanks for tuning in, and we'll see you next time.